So it's winter time. I've just come from the gym, so I'm all the gym, and then Sunny and I had a nice brunch and just chatting about life, eh? And we're it's exciting. We're renovating our office this week, so everything's getting put into boxes, and it's like a clean sweep. And we're doing that because next year we're going to do all our workshops and mentoring from our HQ. So it'll be really cool if you guys come and join us. Anyway, I was just thinking. I've done another video which I think you guys would find very useful, which is basically I want you to set up your bank account. It was a couple of videos. I want you to set up your bank accounts so that things happen automatically. When your rent comes in, 10% of your rent goes into your repairs, a certain amount of money goes directly to your mortgages, so that you're kind of not worrying. You've got automatic 10% sat every month on your repairs, whether you need it this month or next in the year, you're going to need it, and you've got your mortgages paid for, and also bills and maintenance. So we do quite a lot of shared houses, so we clearly, clearly we need to pay for all of the bills and things like insurance, and we put a certain percentage of money aside. In fact, it's another well, bills and maintenance is it's 10% for repairs and 30% entirely for running your property portfolio. Now I have a team in house. You may well have people that rent it, like letting agents and such like. But it's going to cost you 30% of your rent to run your properties, including all your repairs, and then set your money aside for mortgages, and that just keeps your money really calm. Now I want to talk about when money is not calm. So the reason I guess you're doing it, and the reason I certainly did property, was for financial freedom. And touch wood, I'm pretty much there, with the odd blip, but I'm pretty much there. So my team are working, bless them. I'm about to go in, and I've been lifting, having brunch with my friend. I'm now going to go in and work, and then I'm going to go later on to the gym, go do some CrossFit and some handstands for me today. But in the early days, I just want to say you're not alone. If you're sat there every single month and every single week looking at cash flow, having some kind of real sweats on, your stomach's kind of unsettled because your cash flow is so tight. I'm not saying it's a great position to be in. I'm just saying it's an entrepreneurial position to be in, and I have certainly been in that position. And I bet you, if you looked around people and everybody told the truth at property events, I bet you loads of people at property events have either been in that position or currently are in that position. I mean, there was one time when I had 38 pence left in the bank account. Now, I had income coming in, but it was a less than fun day, should we just say. So just be conscious that, almost in a weird way, I'm not saying it's normal, I don't think it's a great thing. What you need to do really is work with working capital, decide how much working capital you want to set aside. However, if you're panicking and sweating and worrying, most of us have been there at some point. So a couple of things I want to suggest. Number one is, say to yourself, how much working capital do I want to set aside that weirdly sits in my bank account and just gives me security? Maybe you want to think about 6 months. So 30% of your rental income set aside times 6, certainly £3,000 per property for emergency repairs at the very minimum. And then also, if you've got a business as well, what's your trading cost for 6 months? In a perfect world, and guys, I didn't do this, but in a perfect world, you'd set that aside. The second thing is, go back to what I was talking about automation. Try and make it automatic. Now, I've made it automatic for years now, and it's lovely, but I've definitely had moments, things like, if you're VAT registered, for example, set your VAT aside every week. Set your corporate tax aside, don't use it. But I know myself, I've raided those pots in the past when things got tight. So try and have very good financial governance, and try not to raid things, and try and set things aside so that you just don't have any difficulty. And then the third thing is, I want you to plan your cash flow. So from my mentoring guys, we give them a cash flow planner. I want you guys to look at all your cash flow that is likely to happen in the next 18 months and plan it out. And use one of those little cash flow planners that, see chalk from lifting? That basically shows you when you're going to be red. And it's really useful to know. I mean, I remember in my early days, and you've probably seen it in another video, I had I can't even remember how much, but I had a red period 9 months ahead. I'd predicted that in 9 months' time I'd have a cash flow problem. It didn't mean to say I was having a profitability problem, it meant I had a cash flow problem. So of course I didn't sleep for weeks. I think it was 15 grand, which now I'm like, oh, that's so cute. But at the time it was like, so I didn't sleep for weeks. But it meant that I solved the problem 9 months in advance. But I think finally, and don't stay redlining it, because it ain't no fun. You'll get to burnout. It's just not fun. But know that you're not alone. Most of us entrepreneurs at some time have been redlining it, but use some of those tips and techniques I've talked about to get you past and over the line back to a more comfortable position, where instead of panicking and your brain making poor decisions because you're panicking, you're actually making great decisions because you've got backup. But know that the occasional red line can be a feature of entrepreneurial life, but it's too risky, guys, so get back over the line. Right, good luck in property. Subscribe to our YouTube channel, and I shall see you soon. Bye.